What's going on with you? You all right? Oh man. 69.91 and 70.23 are the line in the sand. Lower levels 69.75. Those are SPX levels from um, Volland. Looks like we're getting some news again. Oh, let's see. Hey, there you are. No worries. They they've been running those fake outs. You know, I mean, they've been running those fake outs for a little while now. Every day, even yesterday with that put that I got, it was pretty clear that I was on the wrong side of that. But I mean, I still made money. It wasn't a problem. It was just I could tell we were doing the same thing we had been doing. Is like, all right, well, this isn't going to work, and it didn't. They're just still forced buying to the upside, driving it. You know, they're driving it like a boat. When when you're running your trades on the 0 day, do you cycle through a checklist of charts? To be fair, the counter trend trade works quite often on the indices, the Qs and SPY, SPX. It's the right trade a lot of times. So, going with the flow most of the time on the indexes is not the right trade. You were right on the trade that you took. If we were in a normal environment, I would have done the same thing. In fact, I did the same thing yesterday. So did you, right? That is true. That is true. No, but in the current environment, market breadth is kind of taking a back seat, and the VIX is really bullying the market. So it's been like that for like 2 weeks, and today's VIX expiration, and we're just in a different environment. So we're seeing unusual behavior. We don't want to take this kind of behavior and think it's the norm, because you know it's not the norm. We're in the exception. I pulled this up so that we could see what the market's done since Sunday with these, yeah, right, with these days where we just run all day, and then after that big of a run we ran even more and kept it, and now we're running even more again and keeping it. And that is very unusual for the indexes. The reason I asked about cycling through some charts is I do these sort of benchmark checks throughout the day. One, it checks my own bias and thesis, because I think we've had that talk where I was expecting a gap close day. We had gapped up overnight, and I thought we were going to fall down at the open and close that gap. And we opened and just kept running. And I was like, oh, well, we're only going up a little bit more, but we're going to turn around. We're going to fall. We're going to close the gap, and it just kept going and kept going and it kept going higher, 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 higher. I got my butt kicked every time it paused. I thought that was it. It's going to fall. I'd try to go short. It'd run me over. It'd go higher. I completely ignored what price was doing because my bias was very convincing. I was 100% certain we were going to go down and get that gap closed. So every red candle was the start of the fall for me, and I would get short again. By lunch, I had so many losing trades, I didn't want to count them. And I was just sick and frustrated with the whole damn thing. When I came back from taking a break, it was very clear and obvious that there was a beautiful uptrend and I had missed the whole damn thing. From that point on, I decided I had to have a way to check my own bias and get out of my own head. So I cycled through a set of charts. And some of those charts are just really simple, obvious things like what's banks doing? Or what's the Mag 7 doing? Above VWAP, below VWAP? Are they working in tandem or not? Are they doing what price is doing? Those are pretty simple. I can't be bearish if these are continuing to climb to the upside. And I can't be bullish if they're under VWAP and they're trying to fall. So these kind of check me a little bit. Then there's this one, it's not so simple, but it's the cumulative tick. So instead of just the regular tick, this adds it up and keeps track of the tick all day long. If we get 100 on the first bar and then 200 on the second bar, we now have 300. If the next one's 50, now we got 350, and it just keeps adding it up all day or subtracting it. This is actually showing me how unusual the market is. Yesterday, we were long and stayed bullish, but the green line fell in the afternoon, and it's normally the dominant leader. So this was telling me it was a forced grind, buy higher kind of day. But that's confusing and it's unusual. Typically, this will be bullish if the markets are bullish, and this will be bearish if the market is bearish. And if it's not certain, it'll do this sideways thing where it isn't doing anything. And so it's really helpful as a check against my bias. And then the advancing minus the declining issues in the S&P and in the NASDAQ. This is the NASDAQ version. This is the S&P version. I added labels because they make it confusing. It's taking the advancing orders and subtracting the declining orders, and then it gives you the outcome of that math. Just give me the number of how many are up or how many are down and get rid of the silliness. So I added the label that just tells me how many are up. And in my head, I can figure out how many are down. And that way I don't get some weird number that doesn't mean any sense to me. And I look at those throughout the day. We can't be bullish if we're sitting zero, or at least we're not going to be influenced by market breadth if we're sitting at zero. If I'm bearish and this is solid green and pushing higher strongly, then I know my bearishness is wrong, vice versa. So another check on my biases. And I circle back through these charts through the day. I don't just sit staring at them all day. That'd be worthless. But after a new hour or before I go to get into a trade, say we're getting close to a new 1, 2, 3 level, or yesterday's high, yesterday's low, we're getting near a point where I might want to start taking a trade. I'll cycle through these charts and just ask, hey, where are we at? Is it muddy water and confusing with a lot of mixed signals, or am I getting solid signals of really strong bullishness or bearishness? Maybe any reversal signals, whatever we got, I want to see what we have. And, to be fair, some days I don't get anything. I look at it and it's like reading tea leaves, completely worthless, confusing as hell. I'm like, okay, well, I didn't get anything out of it, but at least I looked. And then other days, it's so crystal clear. I can see exactly what's happening and it just confirms my bias and I jump in with both feet. So, nothing's 100% all the time. These last two is the tick and the weighted AD. A good bullish day is the tick, excuse me, the weighted AD above 250. So if we get to 250 and we break that and we just keep pushing higher, I expect price to continue to stay bullish. But if we can't even get to 250 on the plus side, then I don't expect breakouts to hold. I don't expect long days to work. And then of course, look at it right now. We're in a bullish backdrop again today, and this was negative all morning, which again tells me that our market is misbehaving. It's doing strange things because our tools aren't working. And that's because what's driving markets right now isn't order flow. It's what I've been saying for 2 weeks. Market makers, dealers, options flow, 0-day stuff. That's normally what moves us. And it's not what's moving us right now. Now it's treasuries and bonds and crude and VIX. And that's just not what our tools are designed to read. And so we're getting all these missing signals, and that gives me caution. It warns me, hey, be careful, don't think you got it figured out. And then I sit on my hands because I know that I don't have it figured out. Saves my butt, I'll tell you. Sometimes the best signal is one that just says you don't know what the hell you're doing. Okay, I don't know. I'm gonna sit out because I have no idea. These are mine. I'm happy to share, but having a routine, whether it's mine or one that you make for yourself, is an absolute benefit for anybody who wants to trade, whether they're day trading, swing trading, whatever, to be able to check your bias and reaffirm your analysis through multiple sources. Really helpful. All right. We had a topic today. Um, and funny enough, my computer didn't blow up when I did this. I'm running paper and live Thinkorswim at the same time. I keep waiting to see smoke rise out of my computer, but so far, so good. I've pushed it harder than this before. So the topic was trading options using the active trader and OCO, complex orders and bracket orders. Now, on the Discord, I shared a thread, or I made a thread and shared some videos. I guess that makes more sense to say it that way. So just scroll back a little bit. Here's the thread. You click on that, and I shared 3 videos that Lucian made. There's the OCO, and then he just did one for the active trader itself, and he did a good video on stop loss order templates. And then I shared the full Thinkorswim list. So of course those are public YouTube videos. You can find them. um, we have quite a video collection on Thinkorswim topics, so poke around, see what you can find. Trading on the dome can feel intimidating at first, but it's really not that complicated. Once you get familiar with it, just like anything else out there, right? You get familiar with it, and then it's not so bad after all. So first, you got to set it up. It helps if you've got an idea of what you want to do: stocks or options or futures. The buttons up at the top, you can make them do whatever you want. When you click that gear icon, make sure you're understanding what it says here. The first row inherits the multipliers from the order defaults in the application settings. So if you've never gone into your application settings and they're still set to 10 or 100, this won't be a 1 here. This will be a 10. Even though it has the number 1, it'll actually be 10 because it's multiplying whatever your default is. My default is 1. So having a 1 here actually means 1 and 3, 5, 10, 20. That's my option quick buttons, and this is my stock quick buttons. And so if I hit the button, it changes the quantity. Pretty simple, right? And no big deal. Next to that is the template. Now you can change what you see up here, right? So I've got the big buttons, and then I've got the order template. When I click this upper gear icon, we get the choice of what we want to have, and we can see the big buttons: buy market, sell market, cancel, reverse, flatten. That's all of those buttons up there. Then there's a line, and then I have the quantity and the template selector, the auto send on and off, which is really helpful, and then the order template editor. I'm pretty sure that you can change your template without that, but it sure makes it easy when you just have it right there. So that's what I have. Of course, you can add more stuff. There is a lot of stuff in here. People like to use that reverse button or reverse now. I'm not a fan, but whatever. You can mess around with it. Add them all if you want to, and then just remove them one at a time when you figure out what you like and what you don't like. But that's where you. What's up? Hmm. I like that you can name them. You know, you can name them, and if you're a little OCD like me, you know that name organization is like the key to everything. So you can have your quantity for options, and then your quantity for stocks or for futures, and then of course you use that in your naming. I tend to use the math numbers when I know it's something like a trigger with an OCO or a trigger with a bracket. I already know that it's a trigger, so I don't write trigger like they do. And I just have the stop and the profit targets. So I'll choose that. Um, we can see that it's a trigger, and then it's going to offset from my entry, from my trigger. It'll give me a $7 profit and a $2.50 stop loss. And that is just one that I developed here real quick. Now it's called OAC because it's an old one that's been around for a while. But if I was going to do stocks versus options versus futures, then I would want to name it so that I knew which one I was picking, and I wouldn't have to just keep hunting and poking and trying to find what it is that I'm looking for. So let's mess with it and then see. I'm just going to change some settings so that it should give us a chance to name things. So I made a change. I changed it from $7 to $5, and now it pops up with this on the side. That wasn't there before, and I can now choose to save it. This, yep, this is ones or singles, so it can be options or futures, but I wouldn't use that for futures. So options, and it's five, well, it's 250, $5. And just like that, now I've got a second one made. All right. Um, when you choose one of these, I'll choose one of those homemade ones. So this is a trigger with a bracket, and I'm gonna put it down. Now let's go above the market. I'll put it up here, and I don't have the auto send on at the moment. So now my order is up there. You'll notice right here on the side, this little paper clip. This is handy because what if I want to move all three of these? I could move them one at a time. I could, but that's kind of frustrating and it sucks. Or I can grab that paper clip and I can move it and it'll move all three of them. And that's what we got, right? Of course, it canceled it. It didn't like something that I did. But oh, it canceled it because I dropped my limit order down into my stop. So you can use that paper clip to move your orders around. Now it's not grabbing the stop or the entry, the trigger, but it is grabbing those bracket orders that I used, right? Because that's what was built. That's what we had here is a trigger with a bracket order. So not too bad. You'll notice on the chart that these trades are showing up. On Friday of last week, we was talking about trading with options and using the dome and why I like it because I can see what the options price would need to be for me to get an entry at a specific spot on the chart. Say I want to get a short on this market and I want to get that put right when we hit the high of day. So I would want to put my stop order, or not my stop order, my entry on the put at a price that gets me filled when the stock gets to the high of day. Well, how do we know what that's going to be, right? If you're doing it here on the active trader, you can walk that put price up until it reaches the value that you want. And you'll see your order sitting here to buy a put at that price. It's not perfect, but it's close. And the reason it's not perfect is because options prices don't change based solely on the stock price. So if they pump volatility in really fast, then the options value is going to change even with the stock not moving. So it's not perfect, but it's pretty darn close. The problem is we need options. And right now, the active trader is set for shares of stock. Well, that's not helpful. I need an option. This is a little tricky, so I'm going to go through it slowly. That way you guys can catch it on the replay. With the drop down menu here, you have a lot of choices. And if you look at the header, you'll find options right there. So you need to choose that. But now it has another window and it's asking for another stock symbol. This is where you choose what do you want to trade options on. I know it says SPY here, but this isn't going to look at that. It's going to look at where we're at. So I'll choose SPY again. And if I choose it with my mouse like I just did, you'll notice nothing changed. That wasn't helpful, right? Like, what the heck did I just do? I don't know. No idea. So don't do that, right? When you type in the name, don't use your mouse and choose something that pops up in the drop down. Type in what you want and hit enter. And when you hit enter, you'll get an options chain for whatever product you just chose. It only has 4 strikes by default, but of course, it's yours. You can expand it farther if you want to, but you can't expand the box. So that kind of sucks. I'm on the 0-day options right here, and I can see the calls and the puts. And I've got 14 strikes above and below, and then there's the next expiry and the next one and the next one and the next one. So I need to choose what option do I want to trade. Well, we were just talking about buying a put at the high of day. So let's do that. And I want to buy the 699 put when the share price reaches 698.65. So I want a 699 put. That's this one right here. and I'll choose that. So now you'll see that it changed. It says SPY, April 15th expiration, 2026, the 6.99 put. And right now that put is trading for 94 cents. If I was to buy it right now, it would just put my order in, but I want to buy it if or when the stock price gets to the high a day. We know that when the stock rises, the put will be cheaper. So that means my put price needs to be somewhere down here. And I don't know where yet. So we're just going to push the button and see where that gets us all the way up there. Okay, that's not it. So we can move it forward a little bit. Now we're at 66 cents instead of 41 cents. That didn't get us there yet either, but we are closer. And I'm worried that if I move any farther, say to the next spot on the dome, then I'm going to get filled at 114. And we don't want that, right? We actually want to get filled. It looks like probably around 95 cents, maybe $1.001. But we don't want filled if we're not at that level at the high a day. So we can try to put in our order and change the price by ourselves. To do that, we want to turn off the auto send. And that way, if I hit buy, let's just move my limit order. And I need just a, not buy market, I need a buy limit button. Let's buy on the bid. Why not? All we need is for something to pop up so that we can change that order on the pop-up. This right here. Now it's not going to let us do it. So we want to edit. That should give us a pop-up down here. And we'll put in $1. Oh, and it filled me. I probably should have used a different put. Let's try a different one. But the theory's the same no matter how we do it. Let's try one that's a little farther out of the money. 99 is in the money, so let's try a 95. Maybe we'll have some more choices. It's not a lot down here. Buy limit order. Try that. Well, that one failed too. So that's the idea behind it. You can move that order around on the dome until it gets to the point where you want in. Now, this late in the day, we're using options that are 0-day, and there's no prices underneath 7 pennies here, so I can't put in an order that's cheaper. Let's try a different expiry, something that won't immediately feel like that and should have some prices underneath us. There we go. Not a lot of prices, but a few. That'll work. All right, 22 cents is way up there. Should be able to edit that. Where are we at? 97. We could try 47. Or 50. Now you notice that limit order moved down some. We're going to move it again, go to 95, and watch it'll drop even lower. Well, it dropped right down into price. Right now, the bid and the ask is so wide on those puts that even with price being at 118, it just filled me down here in the 90s. Let's see if I can zoom in on these. That might be a little bit of an issue too. There is a zoom button on the side so that you can see more numbers. Yeah, now look, we got 93, 92, 91. So you can walk your option to where you want it. You can also walk your stop where you want it. I'm long now a number of options. So at this point, I could start putting in exit orders. Let's turn the auto send back on. If I don't like where that stop is, I can adjust it and see it on there so that if I wanted to get out when the stock price does something that tells me, hey, going short is bad, right? This is a profit exit, but what about a loss exit, right? If the stock gets above, let's say 699, I'd probably want to get out, right? We'd say, hey, you're wrong. Why are you going short? The market just went up above 699. Maybe that's somewhere around there. We need a stop order. Now I got it at 699.08. We want to adjust that a little bit more, little bit more. There you go. Now I went slightly underneath it, but you get the idea, right? So this is why using the dome for your options can really help you with figuring out where you want your contracts entry and exits to be, right? Now, I've still got some positions open here. It's 695 and 699. So we'll just go to 699, do the same thing, put a stop in. But being able to adjust your stop and your profit targets based on the stock price isn't the only thing that you can do using the dome. It's not the only value that you get from the active trader. There's also the information that you get. So let's talk about that for a moment. What you get on this active trader is how many contracts were traded at a particular price. So this is the 695 put. And we can see throughout the day today, all of these orders. This is a volume profile. It might not really seem like one because we're looking at it with only a set number of penny orders, but this is a volume profile. So if I zoom out a little bit, it'll start to take the shape of that profile. So there's the thin tail. There's a high volume node right there around $1. And then down here is where it's really been active. Once that put price got around 55 cents, it's really gotten a lot of trading activity down here. We can also see how many people are trying to trade this contract and at what price they're trying to trade it. There's 11,900 orders on the ask right now at 5 pennies. Let's just move up there with them. Notice the bid and the ask are all the way down here, but the last is all the way up here at 7 pennies. So you've got more information. There's a lot of buy orders down here. 10,000 here, 2,800 here. So you've got a lot of information. Who's bidding or how many are bidding? You wouldn't have that if you were just in the options chain and not sitting out here where you could see it. So it's helpful, right? Now, in theory, you can add indicators to this. First, we want to chart that option. So remember, I've got the 695 put 0 day. It's going to expire today. And we've got SPY's price on the chart. But we want to change that and we want to map out the option itself. So here's that put and what it's been doing all day today. It opened at $1.10, had a little bit of a spike at the open, made it almost to $2, and then it's just been bleeding off all day today. So in theory, I could put indicators on this like Bollinger Bands, moving averages, and we'll see them on the dome. That's helpful if you are a fan or a believer that the options price, since it can be charted like we are doing here, is the same as trading this underlying. And some people do that. I mean, I'm not against it necessarily. I'm just not a fan of it myself. You can't argue that the logic isn't sound because I really think that it is. It's just I'm not a fan. So here's the 700 strike call, and we're going to chart that one. So in theory, we can map out the candles here. We can use our drawing tools. We can run fib extensions, put on moving averages. I don't think that VWAP will work, but it's worth a try. Sure enough, we even got VWAP. So I think that'd probably be one of the most valuable indicators that you could put on that chart just to see where the average price of that option is for today. And are you above the average or below the average? And look at the way price responded to the VWAP. You know, the people that say that the value of the option, having the ability to chart it, measure it, draw it, and I don't think they're crazy because moving averages work, VWAP works, Bollinger Bands highlight when it's moved too far. So who knows, right? Maybe it does work. But the main thing is you can chart that option and you can still trade that option at the same time. So pretty helpful. And for futures, I mean, I couldn't imagine trading futures without my dome. I don't trade futures on Thinkorswim, but I do use a dome when I trade futures. And I could not imagine not having it. The cool thing is you can add level 2 down below, and you'll notice that the level 2 kind of reflects what's on the dome. Of course, the level 2 also gives you exchanges and all that, but still, it'll help with when you're sizing up the bid and the ask, and nothing wrong with that, right? So here's level 2, and of course, that's the level 2 of the option, not of SPY. So again, really helpful to see how many people are trying to trade the same contract that I'm trying to trade and at what price are they trying to do it. I like having my automatic stop when I start a trade that the stop is already there, but I usually want to manually put the stop where I want it. So I use a default automatic stop order that's set to like, I don't know, I think it's at 12 points right now. It's really far away. So that once I'm in the trade, I can reach out and grab that stop and move it to where I want. But my trade came with a stop, right? Like that's the way I see it. Every trade that I open comes with a stop. And I like that. Now on yes. Also on swing trades, I'm not a fan of using stops on swing trades. When it comes to swing trades, I want to be alerted when my trade is maybe misbehaving or getting beyond a particular area that I'm interested in. And you can set an alert on most brokers on price. And with Thinkorswim, you can set an alert on any of your headers. So if you've got uh, Delta, I'm a big fan of using Delta, but if you've got Delta in a credit spread, or just maybe you bought a call and you just want to be alerted that your option is near the money or even in the money, you can set an alert that says, if Delta gets to 45 or greater than 45, alert me. And that way it doesn't manually close my trade. I want to come in and see, hey, what's going on and should I close this? Don't just close me. That it's really frustrating. I don't want that trade to be closed. Options are complicated and they will get strange prices. And on a swing trade, that's even more so. And I don't want some weird, strange price to kick me out of a perfectly good trade just because the volatility moved, or, one of the Greeks adjusted and changed the price of my option and kicked me out of a good trade. So I'd rather get an alert, whether it's price or delta or something, get my attention and bring me back, and then I'll evaluate and decide if I want out. Options won't trade in the middle of the day or in the middle of the night, so you don't have to worry about any pre-market stuff triggering your option stop anyway. So that, you know, how do I do what? Set an alert. So you can do it from the chart. You can do it from in here. I believe you can just right click and go to create an alert. And when it pops up either from the chart or from here, you can come in and choose where it says price, choose something else. There's your delta, implied volatility. And then, of course, if you come into study and go to edit, now I'm on paper, they may not all be there, but in theory, you should be able to choose intrinsic value, Vega, whatever. But by default, you've got your delta and implied vol right there. Yep. Just be mindful, if you click like I did inside the options chain, be mindful that you click on the option that you've got. Otherwise, you're setting an alert on something that might not be what you even have, right? I right clicked on 699, and so that's where the alert started. And if my position was actually way out here at 705, then that wouldn't have did me any good. So those alerts are really handy. Um, but it's a swing trade situation, right? Like most of my swing trades are not going to get away from me, especially in an options trade. I had Microsoft that I opened yesterday, and I was planning on holding this for a while because I was expecting yesterday to be the start of a pullback. And instead, it broke out and it went even higher today. And so I went ahead and I closed it down. I took profit. It's not like I took a loss. I went long and Microsoft went up. So it it was a trade in the right direction. But I went out to June's options and I used farther out of the money options because I really thought this was going to take some time. And it was already overbought. It was overextended. It had moved quite a bit with the rest of the market. And I didn't see any reason to keep that trade. So I closed it, I took profit, and I will look for another opportunity to trade this some more. But it highlights the example of what I'm talking about. I don't want my swing trades to just be closed without me. I want to evaluate what's going on and make a decision for myself. At the open, options prices get really bad, really bad. And you can get kicked out of some great trades just because at the open, volatility gets readjusted, theta changes from the overnight, from yesterday's price to today. And then all those MOO orders from the overnight hit at 9:30. I can't tell you how many good trades I got kicked out of between 9:30 and 9:40 because the market opened and it moved the options price enough to kick me out of a good trade. So I don't like to use those stops on swings. Now, to be fair, I'm here. I'm here all day. If you work and you're away from your machine and you know that you don't have access to internet or you just don't have access to the charts, please, by all means, use a stop, right? Like I have that luxury because I am here that I can check on any notification that pops up. But if you know, life gets in the way of trading. So use a stop if you can't respond to those alerts. Yeah, the dome will outrun you fast. If the market is moving and you're trying to chart an option and it just runs right off the dome, you just got to chase after it. Now, I use the wheel of my mouse. That's how I'm scrolling quickly. So you just have to chase after it. Yeah, the zoom out and the zoom in are hotkeys, by the way. Um, if you zoom out, notice it goes from like half of a penny and then 1 penny. If I zoom out, it might go to something like, say, 2 pennies between each number, or 3 pennies, or 5 pennies. So it makes the numbers less, and that way you can see farther out. And then that you have the recenter if you want to do that. All of those are hotkey, and you can change the hotkey if you want to do that as well. But it can run fast, especially if you're on something like the Nasdaq. That booger moves, right? You got to chase after that darn thing. So with your options trades, we'll run through it real quick. You want to pick what product you want and then hit enter. Don't choose a name with your mouse. Hit enter, and that forces this box to show up with your strikes. From here, choose the option that you want to trade, and it will adjust your dome for that particular contract. Always check to make sure that it is what you wanted it to be. I know this number seems strange, but it's once you're familiar with reading this number, it's not very strange at all. So what do we have? We got NVIDIA. Then we got the year 2026. We've got the month of April. Today's the 15th. We have a put using the 195 strike. So as you can see, it's not complicated, right? We can read that. It might be unfamiliar to you, so you just have to get used to it. But once you do, you can glance at that and you'll know that you're on the right one. Plus, it does spell it out for you here. NVIDIA, April 15th, 2026, 195 put. Make sure it's the one that you are thinking you're going to get. Now that you have that, if you want to chart it, don't bother typing it all out. Just copy everything that's in that box and then paste it in whatever chart you wanted to paste. You can type things out instead of that put. I'm going to look at the call, and now we're looking at the call just like that. Change this to the call as well. Now we're looking at that call option on NVIDIA. 195 call. Not bad. That thing moved around quite a bit. So get familiar with this, and it can really help you out. It can help you better day trade your options. Now, there is still a conversation that has to be had about how much money should I expect in my options trade. I've shown this before, but it's worth going through again and again. And the quicker you can do it, the better, right? You don't want to spend 10 minutes trying to figure out what your option is going to make if the market goes up $1 or down $1. You want to be able to do this fast in seconds, right? So all it takes is time. You just got to get familiar with doing it. I'm taking a picture because I want to zoom in a bit. I don't want anybody to miss this. Now, in theory, if you go to buy something, you want to buy it at its cheapest price, but you know you're not going to fill there, right? That, I mean, you know it, I know it. So you can put in 273, but you're very likely not going to fill. So try to go for the mid at 274, or just prepare yourself for the fact that you're going to have to buy it at 275. So fine, you bought the 700 strike, you paid $2.75. How much is it worth if the market moves $1? Well, somebody's got one right here that they're selling for 333. If SPY moves $1, what I bought for 275, in theory, I could sell for 333. But again, we all know you can put that as your exit order, and you might be doing the same thing that this guy is doing, sitting there waiting for someone to take it. But if you really want filled, this number will get you out. So if you bought it at 275, SPY moves $1, you can get out for 331. Now, trying to do those numbers in your head might sound a bit much, right? What's the answer? It's 56 cents. How do I know that? You got to get used to doing it, right? Really fast. Don't need the calculator. Turn 31 into a quarter number. Make it 325. Just do it in your head. What's the closest quarter number? 325. From 275 to 325, that's 50 cents. That's all I need to know right there. If you want to add the 6 pennies to it, by all means, go ahead. But you don't need to, because in your head, you can just do it. That's 50 cents. It's 50 cents. Fast. So if I buy this call and the market moves $1, I can make 50 cents on that $1. That's a reasonable expectation. It might not be perfect, right? Maybe I only make 47 cents, or maybe I get 55. It won't be spot on. But at least I have an expectation of my profit. Because I've talked to a lot of new options traders, and they're expecting to make some real money. You know, I bought this call for $300 and I only made $70, and they're disappointed. I can hear it. They sound like they're frustrated and angry, and they feel robbed and kind of cheated. And they just can't. Yeah, I mean, if you make 50% of your risk, hey, that's not bad at all, right? Like, but it's all about our expectations. If I expect to make 30 cents and I make 50, I'm in a pretty good mood. Like, hell yeah, thanks. But if I was expecting $1 and you only give me 50 cents, I'm going to get a little salty about that, right? Like, dang it, where's my dollar? You only gave me 50 cents. So we want to set our expectations and have a reasonable ability to consistently set those expectations. And this is how I do it. Now, it's got a funny name, strike price shift differential. It just sounds bad, right? Very complicated, but it's not. Just look diagonally from the one that you're buying and use the ask. If you can fill for the mid, great, do that. But in your head, you can still just use the ask. 275 to 325, it's 50 cents, done. Now, if I choose a different option and SPY moves $1, would I make more money? Yes. If we look at the 698, it's trading for $4, and if I sell it, I can sell it for 460. That's 60 cents, right? Because we're using the easy math, the fast math. I bought it for $4, I sold it for 460. I made 60 cents in a $1 move. But I had to pay more money for it, right? Everything's a trade-off. I had to pay more for it, but it made more money in the move. And this is how we can gauge, should I buy the 703? I can buy it for $1.40 and sell it for $1.75. I'm going to make what, 25 cents? 35 cents? I think I'd rather get 50 in a $1 move, So that's how you can very quickly identify how much should this trade make if I'm going to put this trade on? And then is it worth it? Now, if you think you're going to get a $5 move, an $8 move, a $10 move, it might be worth your while to grab one of those out of the money options. Because in an $8 move, those out of the money options are going to make you some serious bank. But if you are honestly expecting a $1 move in SPY, don't buy one of these. This one's going to make you $5, 5 pennies in a $1 move, if you're lucky, right? Well, why did we even bother? We get a $1 move in SPY and we made 5 pennies? Forget it. That it's just not worth it. So you do need an expectation of how far do I think the market's going to move? How long am I willing to stay in? And then how much could I make if I get that move? And we can price it in very quickly doing this. And what I recommend for people to do when you're waiting on a trade or there's just no trades setting up at the moment and you're just kind of hanging out, come over to the options chain and try to do that math in your head, because my way works perfect for me. The way that I round up or down depending on the number and how I split things, I can get the answer for me very fast. But when I've talked to other people, they learned math differently than I did. And if you've got kids nowadays, you probably understand what I'm saying. They're teaching kids very differently than how I was taught. But it doesn't matter. You do you. Figure out a way to get the difference between these two numbers, however you do it, and practice doing it so that you can do it really fast. My way is most certainly not the only way, but you need the answer. What's the difference between those two numbers? The faster you can do it, the better. Now, I'm going to say something that is probably a bit controversial, but you can market order in on your options trades as long as you're doing it in SPY, maybe in the Qs. The one really big benefit of trading SPY is that you can just market order in and never get stuck waiting to get filled. Just market order in. This option was $1.84. I'm pretty sure that I just filled. Even cheaper. I got it for $1.83. Woohoo! Who cares? It's a penny, right? Do you want to sit there and miss your entry, haggle over a penny, slip 5 while you're negotiating, and then have to end up paying a higher price for it? Or do you just want the damn trade? For me, most of the time, I just want the trade. It's SPY. It's a penny slip. Just give me the damn thing. So in theory, unless you're trading at the open or in a really violent move based on news or economic events or tweet headline, those are when using market orders are going to be really bad. Most of the time, it's a penny to slip, and you're better off not missing the trade and just getting in. Just get in. Quit messing around. Now, most people are going to tell you do not do that, that I'm wrong, and that you should not be marketing orders to get into your options trade. Use some discretion. Look at the bid and the ask. If it's 1 penny wide, seriously, it's a penny. Come on. Now, you go and look at something else, it can get pretty bad. $2 wide, $5 wide. It can get pretty nasty out there. By all means, don't market order into that stuff. You're going to give away a lot of money, right? It will hurt. You're not going to like it, I promise. But when it's SPY, who cares? It's a penny. Get the hell in. Get your trade on. And if you're not sure, don't do it. Go ahead and haggle and just try to do the best you can do, right? Whenever you're in doubt, just use the limit order. But if you're doing a vertical or some complex trade, butterflies, iron condors, whatever, negotiate the trade. Your broker very likely is going to start you on the natural price, and that's not beneficial to you, especially if you're doing some type of vertical trade, right? Because now we've got to split the bid and the ask for 2 different strikes and find a midpoint in there somewhere. So look at what the natural is. It's $1.61, and what the mid is. It's $1.60. Now in this case, hey, it's 1 penny. Who cares? I might as well mark it in because it's literally 1 penny. But if it's misrepresenting something, say I have one of these and it's way out of the money and it's just trash. Anybody who's got an option way out here can put whatever price they want on it. It sucks, but it's true. They could put $5 on it if they want to. And I mean 5.00 price, $500. They could. It won't fill, but they can do it. And that's going to mess up the bid and the ask. And it's going to mess up the machine when it's trying to split the mid. So be mindful of what that value is and try to haggle, try to get a better price. If you're going to put on multiple lots, start with one. Say you want a 20 lot order. I do it all the time, but I don't jump on with all 20 if I haven't traded those contracts today, because you don't know how good that price is. Earlier, when we were looking at the dome, we saw the last here, and the bid and the ask was actually way below at the time, right? When we were on that SPY put, the bid and the ask was completely below the last. And the same thing is happening right now on the Qs. Not as bad, but it's happening too. Well, actually, that's the NVIDIA's contracts. So when it comes to putting on the trade, if you haven't traded those contracts today and you're going to get a lot of lots, say a 10 lot, a 20 lot, fish around to see what the real price is right now. Just buy one and haggle for that one. And if it instantly fills, you're off, because your trade should not instantly fill unless you're using a market order. Here it says this trade is 65 cents. I'm going to put in 50 cents. That trade should not fill. Of course, I am in paper, so it might fill anyways, but it shouldn't fill, right? The bid and the ask is 64, 63. I tried 50 cents. And if that 50 cents filled immediately, then the ask would suddenly be 50 cents and the bid would have to catch up to me. And we would know that, wow, orders must not have been filled here for a little while because I just moved the bid and the ask down by 15 cents. So I trade liquid stuff, but I know people trade things that aren't so liquid. If you're not sure when the last trade came in, then you don't know if that value is good or not, right? Why is my tag still there? I told you to cancel. That's think or swim for you, but it is paper. There it went. It just took a little bit. So if you don't haggle and you just pay whatever you see, you can get way off in your prices. And if you're trading stuff that isn't necessarily liquid, then you're going to miss in your prices. So if you're putting on a multi-lot trade, try one and see how fast you fill. And then once you've got your price correctly identified, you can add the other lots. You don't need to put them all on one at a time, by the way. You can, at that point, do 10 and 10 if you want to. Anything that I missed on this that you guys want to go over? On options, no. On stock, yes. It's a think or swim thing. So here I just went to stock and you can see my average price for SPY, 679, because I've got a SPY trade on. But under options, nothing. And it's not because you didn't turn it on, it's just because they don't have it. Just try it out. Well, damn, look at that. When did they add that, huh? I like it. Well, and it does options too? Well, let's find out. Let's see. We're at let's put SPY back in here. That's pretty neat. I bet that's handy for futures too. Why did I keep choosing puts? I got puts on the brain. Let's try a 700 strike call. It's got a lot of volume, and we'll just buy a couple of these and put some orders on, spread them out. There we go. I got a couple on market, and I got some waiting on limit orders. And look at that. Thank you for bringing that up. That is cool. Because this, why didn't they just make that work? Wouldn't that have been easier? Yeah, I mean, I'll take something over nothing, but this was already here. Oh, why didn't they just fix that? I've been waiting 20 years for them to fix that. Well, not 20, but it feels like 20. That'd be nice if they'd fix this, but hey, I'll take it. This is better than nothing. Yeah, and send him pictures so he knows what we're talking about, because otherwise he'll argue and say, "Oh no, it works." No, it doesn't. It doesn't work. I did, but let's just do it again anyways. The trigger means where I'm going to enter. So trigger can be anything. It's literally where am I going to enter. So if let's open this back up. This is what you need to have to make all that work. Use the cog wheel. I have these turned on. I like the ability to turn on and off the auto send. I don't like to leave it on all the time, but if you know you're going to be trading, it's nice to be able to turn it on and off. So I put that button in. You need the template editor and the template selector. So those two definitely need. When you get out of that, you'll have the template and that's what you want, right? So that you can make your own templates. By default, it should have single OCO and then trigger, trigger, trigger with 1, 2, or 3 brackets. I made one already. We're just going to make one. I'm going to make a trigger with a bracket order. So by default, it has a quantity here. Since I'm doing options, I'm going to adjust this and make it 2. Let's see if we can make maybe 3. Nope. Doesn't want me to change that. I can change what I want to do on the trigger. Do you want it to be a trigger? Or do you want it to, fill on the last price or on the bid or on the ask? Maybe fill on the average price. I'm going to leave it at trigger. That way, once I fill, because if we think about what this bracket is asking, it's saying, hey, when you enter, we're going to consider that having triggered the trade. And we will then attach these bracket orders. Where do you want your bracket orders to be? So if I link these bracket orders to something other than my trigger, it could get wonky. So I'm going to leave them at trigger. For my options trade, if the options price changes 50 cents, I want out. That'll be my limit order into profit. And if the stock or if the option falls more than $1, then I want out in a stop. But let's make that 75 cents. So now I've got my stop order in loss and I've got my profit order in profit. And these two will get applied when I enter a trade, which is the trigger. Now, since I made adjustments to this, here's my save button. That button wasn't there until I adjusted things. So if you just bring up a bracket order and you don't try to adjust it, you won't find a save button because you haven't changed anything yet. Naming for me is a really big deal. I'm a little OCD about that. Computer files, charts, indicators, bracket orders. This bracket order is an options trade. It's not for stocks. It's not for futures. And my stop and my profit are based on a $1 move. I know what that means to me. So that's why I named it that. When you go to name yours, you could end up with 100 of these things, right? Take the time to think out how you want to name your stuff and then try to be consistent about it. Because the last thing you want is you're trying to get into a trade and you're scrolling through some template list looking for the one that you want, and then you miss your trade because you're screwing around with that. So be mindful, be organized. And now I've got it built. So if I go to something else and then I go looking for what I just made, there it is. And now when I move my mouse up and down here, I can see my bracket. It's kind of big, but it's on there. I'm going to just put the order there and then zoom out so we can see my brackets. It's there and there. So while I'm moving up and down here, I just push my left mouse button. And that's all I had to do is just push the left mouse button while I'm on the bid. If I wanted to sell an option here, then I can just push my left mouse button while I'm on the ask. But if I'm somewhere else on sell orders or trade count, it's not going to work, right? I have to push the left mouse button when I'm on the buy or on the ask. And you can see the little menu pops up, right? That's how I know I can push the button there. So if your dome gets out of whack and you're like way up here and trying to figure out what the heck is going on, just recenter it. You can zoom in so that the distance between each one isn't 1 penny at a time. You can make them like a nickel or 10 cents. You can really zoom out. There we go. So now I've got 5 pennies between each number. And that way I can see farther up and farther down on the dome. This way, if I choose my $1 move that I built, let's zoom out a little more. We can see the triggers to get out either in profit or in loss are following me, whichever side I choose. So we'll put it there. And now you've got this paper clip. The paper clip will allow you to move these brackets. It's not going to move your trigger, but it will move the brackets. So I'm going to stretch these out a little bit. And now you can see that it got wider. And I can move the whole bracket up or the whole bracket down, as long as I don't try to cross my trigger. Now, make sure your auto send is checked. Without that, every time you move this, it's going to reaffirm, are you sure? And I've heard the horror stories that they get from people. There's a famous one from Thinkorswim about a guy that blamed this massive loss on his cat and the auto send button. And they knew he was lying. Like, they were all laughing about this guy. Had some sob story, and he complained for like an hour, took it all the way up the chain of command, and it was owned by Tom Sosnoff back then. It wasn't TD Ameritrade yet. And they're all a bunch of traders, sitting around in the office. They could see each other. They're talking to each other, listening to this guy's sob story about how his cat got in there and placed a bunch of trades and lost him all kinds of money. And he was asking for them to give him his money back. And they finally did it. Can you imagine? Like, they gave him some ungodly amount of money back. And they're just like, whatever, we'll just call it a scratch. Okay, here's your money back. But everybody knew he was lying. He took trades and lost his butt and blamed it on the cat. So they adjusted the auto send, and I think that was when they actually put it into this, because I don't think it was there before that. It was back in the day. I kind of feel bad for brokers when I hear those kind of stories, but then they're dirty, grubby, and then I don't feel bad for them anymore. And I'm, yeah. Yep. I started a thread before the Zoom call right here, Thinkorswim bracket order thread, and I grabbed 3 videos that Lucian had made. One on bracket orders itself, and then one on the active trader, and another one about stop loss orders, because I think in that he touched on the templates without having to use the dome. And so I wanted to really highlight that video too. And then I just grabbed the full Thinkorswim playlist and I put that in there too. Yeah, he does a great job when it comes to application software and that sort of stuff. I remember watching his videos so that I could figure out how to use the dome. Because when I started trading, it was on Robinhood with options. And then when I didn't have my day job anymore and I was going to be a full-time trader, it's like, okay, I'm gonna start trading on Thinkorswim instead of Robinhood. And of course, then I had to figure out all of this. And that's when I figured out I didn't like Thinkorswim to trade with. Yeah. Yeah. I used Thinkorswim for 9 months, I think, before I finally gave up on them. I really wanted them to be my broker. I did. I gave them a lot of chances before I finally just gave up. And the dome, no, no. It's just the short and sweet, no. But my issue with Thinkorswim was my biggest issue was their positions tab. So I've got a position on right now. I got that SPY. I've got 100 contracts, shares, I mean, and then I've got apparently 6 calls right now. And out here trying to, I guess that's just a buy order. We'll just close that. I don't like this. And trying to figure out what your swing trade position is kind of sucks. For day trading, it's not that bad, but for day trading, you know, I want to be more specific. I want to know how the trade is doing. What was my field price? All kinds of information. And I don't like this. It sucks. And of course, you can go over to account statement and then you can see more information, much better information, but you have to fill this thing out to get it to show you exactly what you want. So here's all those canceled trades. I don't want any of those, which of course you can turn those off. I believe you can turn off canceled. You gotta fight to find everything that you need in here. And I don't like it. So what I was doing when I was trading here is I looked at all of my trades in the analyze tab. I would take them over to the risk profile and I would look at all my trades from here. That way I could see, looking at what's down here, where I'm at, what's going to happen to me if we go up or we go down, and I could see all my positions really well. But I never did like how the positions tab worked. And it was the number one thing that caused me to leave Thinkorswim is the positions tab. And the broker that I use has a fantastic positions tab. Although yesterday I had that Microsoft trade on and it showed each leg individually. That drove me nuts all day. Even today when I logged in, it was still individual. But I can pop out the sidebar and there's the vertical that I had traded. So it was working there and it worked on the website. But when I was looking at my position here, it was showing each leg individually, not cumulatively. And then I couldn't see what my P&L was for the position in total. I could only see what each leg was, each leg was doing. And that's crazy. I don't know why it's doing that now. It never has done it before. Brokers, you know, there's always something about a broker. But what you know what? Let's just put on something. Doesn't even matter. AAL, it's got earnings. Oh, so what? So this is an obvious vertical, and it just filled. When I go to the activity tab, where's my vertical? I can see the filled trade. It's AAL. It filled. What filled? There's the vertical right there. But this isn't what it used to look like. What it used to look like is you would see the call long and the call short, and it would have AAL above those two. And then I could see that AAL, and I'd click on it, and these two legs would be showing, and it would give me a price for how this position is doing. And right now, I don't know why, but it's not doing that. But if I go to the website, I'll show you how it's supposed to look because it looks proper on the website. And I don't know why it's looking proper on the website, but not on the app. It was working just fine. And now suddenly it's not. Let me get logged in. And these are the kind of things that will just drive somebody cuckoo. So trade, nope, positions. All right, there's my AAL. And when I open it, there's my position. So if this trade goes up or goes down, my P&L will change for that trade. And I haven't set the columns up, but there is a column, trade price right there. I bought this for 9 pennies. So if the trade increases or decreases, I'll be able to see it cumulatively with both of these contracts instead of I sold that one for 22 cents and I bought this one for 13 cents. Well, actually, I bought it for 22 and I sold it for 13, and I can do the math. And oh, that was a 9 penny trade. I shouldn't have to do the math. I should just be able to click AAL and see my position. And right now on the broker, it's not doing that. It was last week. I don't know what change they made, but it's driving me crazy. I've looked in every setting that I can find, and I can't find the solution. Right. It is there and it is correct. But it used to also be right here. And I don't know why it's not. It, I spent hours yesterday trying to solve this problem and I never found the answer. I just gave up. I don't know. It's a little bit frustrating. I mean, more than a little, but I don't know what to do about it. Wow, RGTI's options are crazy right now. This morning they were not so bad. Of course, quantum is one of the risk on themes that got lit up this morning. And boy, did they get lit up. The implied vol is through the charts. I picked up a subscription the other day to a place I haven't had in a long time. This is FinBiz. Um, it's a pretty handy site. I think I got it for 20% off, which is not that good. I think you can get it for better, especially on like Black Friday or something like that. So I paid $300 for the year. I closed my public account and I pulled out, well, I didn't close it, but I pulled out $1,550. So I may as well have closed it. There's like no money left in it. I'm going to open another broker somewhere. I haven't decided where. And I had some extra money left over. And so I bought a 1-year sub to FinBiz. Um, it it's a great scanner. It really is. But I haven't used it in a while, and I was kind of thinking there would be some updates. I think the charting is a little different. It doesn't seem radically different, but it's a little different. So it does, doesn't it? A little bit. I took some time yesterday to adjust my charts to the way that I like them, the colors, and that's right. Yeah. Even Spot Gamma. If you bring up Spot Gamma's tool, it uses Trading View. So here's Spot Gamma. I can go to the Hero tab, and here's their Trading View chart. And the options positions. And of course, their lines are already applied. So if I want to see just today's options and calls versus puts, there we go. I don't normally look at it in this view. Normally I look at total, so it combines the calls and the puts and gives me a single line. But there you go. And we went right to the Spot Gamma implied measured move. That would be like my ADR lines. only they call them the implied move. So it's like your 1 day expected move measure. That gets posted by me every day in the chat, by the way, if you guys want the measured move for the day. I post it every day. But this is TradingView. You can see the icon down here in the bottom. Pretty cool. And here's the ES. So yeah, I picked up FinBiz. They have a really good scanner, decent charting. I don't really care for their news that much personally. I'm not a fan, but they're without even going to the scanners, this page that I'm on, it's their homepage. It gives you the indices for the day, and then you've got your market breadth stuff here. How many stocks are above their 50 MA? How many stocks are above their 200-day MA? Stocks that are making new highs, stocks that are making new lows. All that's old school market breadth stuff. The advanced minus the declining issues. And then you've got all of these. These are all scans. Top losers, new lows, oversold, most volatile. And then you've got trade patterns, channels up, channel down, double tops, head and shoulders. Now, a lot of these names I would not trade. It's just me. I'm picky. But at a glance, I can look through and see if any name in there is a name that I would trade. And then if it is, I can dig deeper because I know it's showing up in here. And I like that. It's nice, it's easy, but that alone wouldn't be enough for me to take a trade here. That's or not to buy a subscription here, I mean. Their heat map is pretty darn good, and I've talked about heat maps before. These things are awesome. Thinkorswim has a very good one. And when I was new to trading and I seen this for the first time, I thought, what a waste. Who the heck made this? And why would anybody have even took the time to make it? This is ridiculous. But I was new and I was ignorant. I didn't know any better. These things are really helpful and they're easy on the eyes, or at least they can be. At a glance, you can see what's up with the market right now. The market breadth and the Mag 7 stand out very easily. So the Mag 7 are these big boxes. So it's easy to spot them. Amazon, Google, Apple, Broadcom, Microsoft, Nvidia. We can see them really easy because it's the biggest boxes. From there, we can also see that the rest of the market, especially say staples, is not doing so good. Utilities, materials, energy, real estate, industrials, they're getting beat down. So it's software and technology. Financials are kind of mixed a little bit with the bigger ones, but the rest of them are doing really good, all at a glance. And then, of course, you can adjust the settings, how we're doing on the week, or how we're doing in the last 5 minutes. So pretty handy. Thinkorswim has the same thing, not with these sort of extra, but they got some good stuff in there. It's a good way to be able to see what's happening in the market at a glance. And your eyes will thank you. It's better than squinting at a watch list column all day. The screener has themes, which is pretty darn handy, I got to say. Cybersecurity, I was looking into that yesterday, and I was able to just tell it, show me cybersecurity, show me US country companies, and I want optionable and shortable 19 names. Done, just like that. Or how about EVs? Electric vehicles. $38 names. Now, I don't generally trade things that are less than $4, so I can fix that. Let's just bump it up to 5. Nice, easy number. 30 names. So now we can go to technical and move the beta to a 1 and true range to 1. Now we're down to 17 names, and there's the charts. So I can just look at them from here and then decide if I want to dig deeper or not, which is how Koifin used to be. And I really loved Koifin, and it was free for years. And then they wanted me to pay for it, and I got rid of it not because I didn't think they wasn't worth money, but I had been using them for years, and suddenly they wanted me to pay. And I was like, I'm not paying you when I've been using it for years for free. Nothing changed from yesterday to today, except that you decide that I should pay for it. So I'm not paying for it. So I never went back. But Koifin is a good one too. And I'm sure it's worth the money. I was just salty because they suddenly wanted money. But this is easy to work with. It kept my chart settings because it didn't used to look like that. I had to make it look that way. Let's see. We want things that are up on the week and are down today. 5 names. There we go. Qualcomm, GM. Let's take a look at GM. What we got there? I should probably look at AAL since I bought something of. It'll be okay. Now I like the ability to scrunch the chart up a little bit. So go to full screen and then add a side, just because I think it's a better visual to have it smaller like this. And at the same time, hey, why not? I get to add a different time frame. I do like multiple time frame analysis. So I got the 10, 20, 50, the stochastics, and the MACD. I didn't adjust those two. They're running at their default settings, and my moving average colors are the same as they always are. By default, it'll draw any price pattern that it sees. Oh, and I also added floor pivots. I grade them out so they're not intrusive, but they are there. When you're on a daily chart like this, it runs for the whole month. So it's a monthly floor pivot. It's a little weird, but if I do go in the smaller time frame, it should adjust for today. Yeah, there it is. There's today's floor pivot. So that's cool. At least it's smart. They also have an anchored VWAP that I like, and you get to choose where you want to anchor it. I was looking at Microsoft yesterday, and I anchored it off of its last earnings. My drawing is still there. That's cool. So there's the last earnings, big gap down. And then, it's been down here. It jumped that anchored VWAP yesterday. Now I got out of my Microsoft today in profit. My idea is that I want a pullback. I bought my calls yesterday on the pullback, red candles for calls, right? That's the way I do things. But if it's going to make these kind of gains and get up into the 440, 460, get that gap closed that I'd really like to see, or like around 480, I want to get a better pullback. I want not just some red candles, I want a red day. So I got out of my long Microsoft. I'm thinking that we can retest this anchored VWAP like a Busby. You can see when we were underneath it, we came up and we bounced against it, failed, and then here again we failed. So I'm hoping we're going to get above it and pull back and check that thing, and then if it stays bullish, we'll go up from there. Maybe not, right? Maybe I'm wrong and it's just going to run and run and run, and I got out and missed my chance for a much greater profit. And if that's what happens, fine. I still made money. I'm not stressing on it, but it was $20 wide, so I could have made some good money. If this thing just runs and runs and runs, then I missed out on a really good profit trade. I just think we're going to pull back because this thing's running faster than it should. Like a lot of the market right now is running farther and faster than it should. So Qualcomm was also, I ran a scan yesterday when I found these. It has the same setup. And you can see there's my anchored VWAP on the gap down after earnings. But Qualcomm, while it was up earlier today, it hit that anchored VWAP and it fell back down. We're still underneath it. Now, because I changed the time frames, the anchored VWAP isn't where it's supposed to be. We just have to ignore that for a moment. But I came into the intraday today to show that it opened and it ran up. It was a good solid run up, and now it's pulling back. But I was eyeballing Qualcomm yesterday and debating whether or not I wanted that one instead. And I went ahead and I took Microsoft. Eh, I like Microsoft better. I also like Microsoft's options better. I could have swore there was a way to link this so when I change it, it changes both, but I don't remember. So, and it says I'm on my trial, but I mean, I paid for it already. I'm going to keep it for the year. Maybe at the end of the year, I'll unload it again, but they do pretty good. So the scanner is nice. Depending on who you have um, for a broker, you might need an external scanner. That it's just the way it is. Who? Heck yeah, that's nice. I bought mine for 85 and then I closed it with $75 profit. So I didn't make 100%, but I made probably, yeah, right? I closed mine and I had a number of people reach out to me and say, "What? You closed it? Why?" Like, cuz I had a really good idea of what I wanted to see the stock do, and it's not doing that. So I closed my trade in profit. What's not to like? If I had thought it was going to continue to run like this, I would have gotten shorter duration and closer to the money like you did. I would have, but I thought it was going to take longer. Yeah. So there was a number of reasons that I was looking at it. One, FinViz brought it to my attention, so I started looking at Microsoft. Two, the Mag 7 are doing really good, but Microsoft's got a history with April or May being one of its strongest months seasonality. So if you look back at Microsoft and how it behaves every year, it's yearly seasonal. It tends to do pretty good in the April to May timeframe. Look at last year, we were down into that April. Here's March, right? We kind of flattened out through February into March, and then it ran all the way to July. And then here's, yep, seasonality. So that was one thing that had me looking at Microsoft. And then, of course, the pattern was good. That explosive move out of this range down here, this IX10, I like that. And of course, we're looking at it yesterday, right? So we had yesterday's gap up. We didn't have today's yet. And so again, it was looking really good. Bullish continuation from the big breakout. I liked it. The options were decent. The earnings, it's funny. What I ask you, Marziti, do we believe in Microsoft just because it's Microsoft? Right? Eh, They've got that deal with Anthropic too. And so now anytime somebody uses Anthropic, Microsoft gets mailbox money. They just get a little bit of money from it every time. And that's just benefiting Microsoft. So another reason to take it. The So Hugo, to answer your question, you could take a call now, but like I told Marziti yesterday, expect the pullback, right? Like if you get long in this now, you better expect that it's going to pull back. I was when I got in it yesterday, I was definitely expecting the pullback. So when I didn't get it today, I got out. I took my profit and I went home. But I got in on that pullback. I think it was this pullback. This one is too late in the day. I'm pretty sure it wasn't that one. And it might have been one of these red candles up in here, but I'm pretty sure it was during this. But either way, I got in on a red candle, went long, and I thought we were going to stall out, maybe fade back a little bit, and then kind of chop and work our way up. And instead, it just kept right on going. So I'm looking for a deeper pullback before I take my next long in this. But I do expect to take another long in this, to be sure. I definitely think it's not done. It's going to continue to go up, and closing this gap at 483 is my target. That's where I'm headed. But I don't want to buy a call on a green day. That's I did it yesterday, but on a red candle. With it behaving this much and making these big of a move, I've now decided it's going to have to be a red day before I go ahead and I get them calls. And then I'll get some calls then. And this should be where it pulls back. You can see this previous area here at 410, 411. I'm expecting some trader's remorse here. And we probably are hitting some buy orders from anybody who was short here, right? They put their buy stops on somewhere around this level. We could have triggered those and went up even higher, and we didn't. So either they adjusted it or moved it, or they did something, but where's their love? We're not seeing it. So if tomorrow's red, buy a call. I will be. But I went ahead and got out. if we had thought that today was going to be a breakout runner day, I would have traded much closer to expiration and much closer to the money so that we could have made more money in the trade. If we got in around the 390 area and we got out at 415 ish, or excuse me, 405, we made about 15, $18 of stock movement. That would have been a decent profit right there, some real profit. And instead we made 75 cents, or I made 75 cents. 88% profit is what I made in that trade. It's okay. I'm not complaining. And I don't think I got out too early or anything. I just readjusted my analysis based on the price action. I didn't like what I saw and I took my leave. So cheap is relative. Some people have, multi-million-dollar accounts and they think $1,000 is cheap. And then other people think that that a $5 call is too expensive. So cheap is cheap to you. But make it a size where you have no fear, right? I don't fear losing a 10-cent trade, right? You know what I mean? Like I don't care. I can't get dinner for $10. I don't want to lose, but 10-cent option? Come on, man. I ain't scared. But if it's a $15,000 option, I'm going to behave differently. We're not supposed to, but I'm gonna, and I know I am, and I don't want that. It's too big. So make it a size where once you've got it on, you don't care. You go to sleep at night, you sleep like a baby, and you have no fear. That is how cheap it needs to be. The one that I had on was 85 cents, $85. And I don't want to lose $85, but again, it's not going to break me. And I'm not scared. No problem. That was cheap enough. This that I just built, $1.33. That's my trade, by the way. That's 485, 500. I'm pretty sure that's what I had on my trade. I bought it for 85 cents. Right now, it's worth $1.33. 480, 500. I thought it was 480, 500. And look at the options on that 480, 500. Oh, I got 485 here. Let me adjust that. 480. Oh, it's worth $1.77. So the 480 had a lot of volume yesterday, a lot of volume, and so did the 500. Here's the 480. It's only 2,000 volume today. Yesterday, it was a lot greater than that. I took pictures because it's a good way to keep track of your trade and keep your analysis. I believe I sent that. Yeah, I did. Awesome. I sent it to Marziti. So that means we get to take a look at the picture here. The volume was 14.9 thousand contracts traded yesterday on that 480 and 1.2 on the 500 strike. And look at that open interest. So another reason for me to pick those strikes, right? 85 cents, lots of volume. And then look at the implied volatility. I was buying low, selling high. That's exactly what you want to do. The problem is when you're out of the money, if you get too far out of the money, it starts to go against you, right? Because you go against that um, implied vol curve. And then the next thing you know, you're out of the money options. You're actually buying high and selling low, which of course you don't want to do. Hey, Austin, have a good one, buddy. Yes, sir. What's that? You know, with all this running around, Apple has not yet participated. And there's a number of people right now who think that it's going to be the next one to go because it hasn't yet gone, right? If you think about it, everything else has gone, but Apple hasn't gone yet. So, well, okay, it finally did today. It's starting to take off a little bit, but let's see it on the daily. I um I am usually a very large fan of Apple. I really am. And my question on Apple is the exact same one that I questioned on Microsoft yesterday when I sent it to Marziti. Do we trust Apple just because it's Apple? Do we trust, Microsoft just because it's Microsoft? I do. Yes, I do. These companies are not the normal companies that are out there. And when they're at all-time highs, everybody hates them. They talk trash, how bad it is as a company, um, and yet they're buying it. Then it goes down, and they talk trash on it and how bad it is as a company. And it doesn't matter what they do; they're talking trash. But when it's down, they're selling it, and when it's going into all-time highs, they're buying it. Flip all that around. Buy it when it's down, sell it when it's up, and quit hating on it. But watch social media, people just love to hate Microsoft and Apple. So these seasonality companies are fantastic. Their history is phenomenal. They've got their events that you can always anticipate. They've got their product launches that they always come out with the same time every year. And they are hedge fund hotels. Big institutions pile their money in there because they know it's a safe haven. Remember, they can't go to cash. They'll have to pay a penalty or a fee. They'll get into one of these things and just hide their money in bad times. So when they start to come up off the bottom, I treat them like Apple and Microsoft. I don't treat them like any other Joe Schmo company. Shouldn't, we're not supposed to. Every trading book out there will tell you not to do that. But I, the problem is though, Apple, like Microsoft, once it finally starts going, it can just run. Unfortunately, that works both directions though too. But yeah, they have a history. Once they, get going, they can go 4, 5, 6, 7 candles in a row. One of Tom Sosnoff's biggest losing trades was an Apple trade. He was looking to counter trend trade it. He thought it had moved too far, too fast, and put on a trade to go the other way, and it ran him over and kept right on going. And that's because it's known for that, right? It will make much bigger moves than you thought it could make and not even pull back and just keep going. Microsoft too, but that's not what I wanted, which is why I got out because it didn't pull back. Apple might pull back. I got this kind of sneaky suspicion where we're getting close to earnings, and I'm a believer that companies will run into earnings. Not all of them, but we have these cycles, and I think the Mag 7 are going to end up running into their earnings and then they're going to get sold after earnings. That's my sneaky suspicion. And it's one of the reasons that I liked going long yesterday in Microsoft, but I still expected the pullback and I didn't get it. And so I got out. And now I'm waiting for a better pullback. It's amazing how often that stuff works, against all logic, to where we're literally sitting there saying that shouldn't work, and yet it works. There's so much about the market that shouldn't work, and it works, and I can't explain it. And it took a long time to acknowledge that, even though it doesn't make sense. I don't, I'm not a believer of UFOs and ghosts, but there's a lot of strange stuff that happens that I can't explain. And that's the same thing with the markets. There's stuff that I just can't explain, and yet it works. A little tip, guys. I was just talking to somebody about a trade that they had that went wrong. If you're in an options trade and it goes to max loss, don't close it. It's already at a max loss. You can't lose more. You might not like logging into your broker and seeing that max loss trade there. I know I don't like it when I see it, but don't close it. It's as bad as it's going to get. The You might get a miracle and it can turn around. I've had that happen. Most of the time when I have a max loss, it ends up being a real max loss. But give it the time to play out. Who knows? Things can change, right? Somebody might tweet something. If it's already a max loss trade, or if it's 5% away from being a max loss trade, you know what I mean? Just leave it alone. Don't close it. It might come back. Yeah, especially if you have time on it. Because, even if you don't have the skill to roll it, or maybe it isn't worth rolling, I've had some of those. Maybe it can't be fixed, but maybe it can. So, bare minimum, leave it alone and see what happens, and start playing around with possible rolls. Maybe you can get a roll, maybe not, but try every day to roll it and just see what they'll offer you. You might find on a day that a market really runs, or a day the market really falls, that the options prices will turn just enough to give you a better roll than it was giving you the day before. Sorry, I can't type and talk. All right. So I think all the Mag 7 are going to continue to do good. We didn't have time today to do the market breadth charts, but I had it on my list for Friday anyways, because I wasn't sure we were going to get to it to begin with. But on Friday, we're going to go through my macro charts, and I'll show you guys some of the tools that I use to get a feel for volatility, and how I evaluate whether or not we should be trading in the Mag 7, or what we should be expecting the Mag 7 to do. And charts like this that are really good for broader tech, um, growth versus value, weighted versus unweighted. These can give you a feel for the bigger space out there, and whether or not the market is safe, if we're at risk. I'm a big fan of gauging overall market risk. And I know that's hard with newer traders, because you can't really differentiate between the risk. It all feels strange and unknown and unpredictable, but there really is a consistency to the market. Think about mixing batter, say for pancakes. You put in too much liquid and you've got soup. And if you don't put in enough, you got some weird putty paste. right? Well, the market is the same way when it comes to risk. If you're not familiar with it, it might all feel like risk, but there's various shades of gray in there. And right now, we're in a high risk environment. It might not feel like it because we're screaming into the highs, but we're in a real high risk environment. There's a lot of bricks in the wall of worry, a lot of doubt and confusion and uncertainty. This has been one of the hated rallies, and there's been a few of these over the years. These are hated by the general marketplace because nobody trusted the rally. And by the time they did, it was so outstretched that they're like, no, no, I can't buy it now. It's already run too far. And the next day it goes higher and they say it again. No, no, I can't buy it now. Sure, it's going to pull back now. No way. I can't buy it. And then tomorrow it gaps up and runs again. So a hated rally. Don't let this fool you. There's a lot of risk right now. We're in a high risk environment, and this was a dangerous rally. Some of the best bullish rallies in history have come during bear markets and big market uncertainty, and that's what we're in right now. So stick to your guns, look for good, clean setups. And if you are speculating and guessing, keep your risk as small as you can. Be willing to take profit quickly. Don't worry about leaving money behind or leaving money on the table, however they say it. Don't worry about that because that isn't the kind of market we're in right now. Take profits and keep your risk under control because all of this is based on false promises and shady headlines. So it can all disappear in the moment's notice. Yeah, I like that. It's really bad. Um, and we've seen it before. Most of the time, these play out with a continuation. So, the most likely outcome is that we're going to run up, break into all-time highs, go up a few more bars, and then Busby off of that, and then maybe chop a little bit. Maybe. Kind of like what we did last year with those April lows, and we ran up really hard. We broke out, dropped down to Busby against it, and then we just kept right on going. Back here, same thing. That was a hated rally in 2023. I remember that one. Everybody was mad about that one. But I think I did a good job of calling that one. That big drop down red day. And I was like, this is the one. It was in the morning briefing. And I remember it because I was pointing to this one. And I like, this is what we're looking for. And it's happening again. We were looking for it to happen here. And then we had that hated rally and it ran up big gaps and then another big gap broke out again. Yeah, it's just like that one. Right. For those traders looking for confirmation, they didn't have it because these kind of moves don't usually come with confirmation. By the time you can confirm, it's already gotten too far away. So if confirmation style trading is your approach, you can't trade these kind of moves. There is no confirmation. Then there is, well, what signals is it giving us? It's giving us a bunch of signals that say don't trust it. Big gaps, don't trust it. Big outsized bars, don't trust it. 6, 7, 8, 9, 10 red bars in a row or green bars in a row, don't trust it. Those are three big signals staring us in the face that says don't trust it. Right. And then what's it do? It just keeps on running. But an index trade like SPY or the Qs is not the same as a Tesla trade or an Apple trade. They're just not. So you have to be able to differentiate what chart are we looking at? SPY. Okay, when I see that behavior in SPY, it's very likely going to break all-time highs and keep on going because that's what it did last time, and it's what it did the time before, and it's what it did the time before. But if I'm looking at IWM or DIA or Apple, Microsoft, I don't think I would trust it. It'd be different. Will this time do what it did the last two times? I don't know. You know what I mean? I don't know. It should, because history tends to repeat itself. But one tweet, one headline, one thing goes wrong, and we're going down. I wouldn't mind even a little bit if we went down. It would not bother me at all. But I'm also more than accepting of the fact that we might not get that opportunity. And for the ones that were calling me out on that Microsoft trade, oh man, I mean, I'm not going to show my chat, but some of these guys are pretty rude about me closing my own trade. But it's my money. I'll do what I want. I'm happy with my trade. I no traders remorse whatsoever about getting out where I did. And yet the ones who wanted to hang on longer wanted me to validate them staying in. And of course, it's your trade. You have to decide for yourself. And I don't. Right. No, I didn't put it on Twitter. It's from people that know me from this Discord and another Discord. And they're just wanting me to validate or give them the permission, I guess, to stay in. It's like, it's your money. You stay in, you face the consequences, but you're not going to say, well, I only stayed in because Signet told me to stay in. A lot of people do that. They blame me when it goes wrong, and then they take all the credit when it goes right. But really, I just try to share the trade that I'm taking and then let people know what I'm doing with it. I'm getting out, I'm staying in, and the why behind it. I had a really good idea of what Microsoft was supposed to do, and it didn't do it. So I got out. But don't be surprised if SPY, the Qs, if we just keep right on going. There's so much buying coming in behind the scenes, and for everybody's retirement accounts, for the broader market, it is a good thing. For us as a trader, I sure love a pullback. I just don't think we're going to get it. Yeah, I would love a pullback. That'd be great. Yeah, let's look at the you make a good point. So someone mentioned look at SPY on the weekly. And I do love those weekly, monthly bars. There's a lot to if you're swing trading, hanging out on the weekly and the monthly is a whole new ball game and is a great way to trade. It can really help if you're feeling like you're getting out too soon or you're missing a move. I had somebody tell me last month they always felt like they were late to the party and they always missed the move. And I told them to use the monthly and the weekly, and the weekly is your entry. And unless you want to get wild with it, then you can use the daily for your entry, and you won't feel like you're chasing after the market anymore. And the the response isn't something I would say in polite company, but there was a lot of cussing in there. They didn't like my answer, but I'm being completely serious. If you are using these three time frames, you will not feel like you're chasing and being left behind and getting out too soon. I don't. I feel so much better about my swing trades when I'm using these. It is much less stress. And my entries feel better when I'm taking them from here. And I know we're not supposed to use our feelings and emotions, but I know for a fact if I don't like my trade, I'm going to get out of it. I'll find some excuse. I will come up with a reason. I will get out of it. That's just the way it is. So I want to know that I'm happy with my trade, because if I'm not, it's going to get closed. You know, we're not supposed to do that, but knowing yourself is a really big part of trading. So, you know, I get a big head when I get a really big trade, and then I get cocky and too big for my britches. I know that. So I'm very careful when I take a big trade about what my next trade is going to be, just because I know me, right? So everybody has to figure out your own little nuances and your little quirks that'll get you in trouble. That is a heck of a recovery on the weekly. Man, that is nice. So of course, we need to put our fibs on at that level. I'm going to close this paper out. That's nice that we can have both going. I'm surprised my computer actually survived. We should be getting right up into the 111. $705.50 on SPY. And that's likely where we will digest. We're at 700 now, and in the last 2 weeks, we have gone 11.25%. And where's the 10-day? I think we can get a credit spread on tomorrow, because it's too late now. A call credit spread at 705 for next week. We'll see how much credit they offer. We are 3% away from the 10-day. Dang, we might not get that chance. Tomorrow, we're very likely going to be down 0.5% or more by the open. I don't know. Maybe not. We've been stretched this far yesterday too, and we didn't fall down. So maybe not. I think so. So plan, right? Plan for it. If we open gapped down tomorrow, you could consider a short call vertical. Typically, I like these closer to the money. And if we're gapped down, I'm not going to necessarily want to do that. So we'll just use the fixed value of 705. Look at the open interest. 705 and 710 have a lot of players. And on the volume, 8,000 and 2,500. I'll take it. We're looking at $5 wide, $1.10 in credit. $1.65 would be better. That'd give us 1/3 the width of a $5 wide vertical. If you don't know your fractions, bring up your calculator and just divide the number by 3. We want 1/3 the width if we're going to trade out of the money options, right? So take $5, divide it by 3. I need $1.65 if you want to round it in credit, and they're only offering $1.10. So if I can fill this trade tomorrow for $1.66 or more, I'd be willing to take it. Otherwise, we're going to have to move closer to the money until we find $1.65. So there's some volume. Really, all of these have got decent volume. Here's 702, 707, $1.75. Okay, we can go a little further out. 3.8, $1.50. It's too cheap. Either one of those, whatever gets us closer to that $1.65. But you know, be mindful that we could punch right through 111, right? We could go right through it and end up in 715 before we finally pause. It feels like it, doesn't it? OPEX is on Friday. So we could run all the way into OPEX. Yeah, I mean, banks are still pumping it out on the earnings side. Let's see what we have. What do we need? Let's try that. No, that's market. That isn't going to do it. For earnings and stuff, I mean, OPEX is the big one, but there's also we're done with everything. Oh, we got some job numbers tomorrow. That's what's coming in. They're not the big job numbers, but any job numbers. So initial jobless claims are coming in. And then we've got a lot of European stuff. And then into Friday is OPEX. But really, I mean, that's it. We don't have any more economic data points. Yeah. TSMC has earnings, and then Pepsi, Schwab. These guys don't move markets. If Walmart was going to report between now and Friday, I'd be a little concerned, but they're not. Jamie Dimon, we made it through without him kicking us down, so I don't know of it. You know what I mean? Mag 7 earnings are, of course, a threat, but we're not there yet. So, yeah, 2 weeks. That's right, Hugo. So the only thing I see at risk for us now that we're through with the VIX expiry is OPEX on Friday. So that's what I would watch for, the continuation. Because, you know, the funny thing is, at some point, we're going to finally turn. But for everybody who keeps trying to short this, they are the fuel for this to keep going higher. And when everybody quits trying to short it and they all jump on the bandwagon to go higher, that's when it's going to go down. All right, guys, let's wrap it up. We'll be back. Do it again on Friday. We're going to get into my macro charts, and that probably won't take all day. So if somebody's got topics they want to hit or charts they want to review, trade ideas, really anything, hit me up. I'll add it to the list. Otherwise, I'll see y'all in the morning. Always enjoy you guys.